Hey guys, Whitney here. Welcome to today's Passive Investing Made Simple Masterclass. Today we're going to be tackling the topic about AI in real estate investing, especially passive real estate investing. Is it hype or can it be a game changer for you? But before we dive into that, I want you to let you know that we do this webinar weekly, every Tuesday, to help you learn the ins and outs of passive investing, to help you turn your active income and savings into passive income and long-term wealth. So maybe you've tried investing passively before, but just couldn't get comfortable making the investment. Or you actually invested before and you're like, oops, I might have made a little bit of a mistake or got a little bit over my skis and ahead of myself. Or you're just here, you're a seasoned investor and you just want to sharpen your skills and level up your game. If that is you, you're in the right place. Now, if we haven't met before, my name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at passiveinvesting.com. And this is what I do full time. I, help investors understand how to invest in real estate. In passive real estate, I've scaled a portfolio since 2002 of over 800 million in active assets, which include 6,500 residential units, some self-storage, express car washes, a slew of other investments, and then the passive side of my portfolio. I've also done the active investing with live-in flipping and house hacking. And really, I document that journey in my book with Money for Tomorrow, How to Build and Protect Generational Wealth with Bigger Pockets. You can grab that here. Now, all of this, my whole journey has been leading to one result. This is what that I keep on the ball. This is the ball that I'm always looking at, is how can my investments, active or passive, help me get 100% control and choice on how to spend my time. And I bet you, if you're here, this resonates with you, okay? Financial freedom is amazing, but that is just a tool to help us get the other freedoms in life, which is freedom of choice, freedom of time, freedom of location, freedom to create an impact in the world. Now, here's the thing. You can do it actively or passively. And sometimes you might need to start off a little bit active in order to be able to build up the capital to get into the passive investing. Or maybe you are that high income earner, you are that business owner, and that you are trying to figure out how to buy back your time. Okay, that is a lot of the investor type that we work with at our company, passiveinvesting.com. There, we've acquired over 2 billion in assets, have acquired at 1.7 billion assets under management. Currently, over 400 million deployed in our real estate debt side of our business. And so you can see our verticals here: multifamily, express car wash, self-storage, hotels. And like I said, we can help you achieve that 100% control and choice on how you spend your time here at passiveinvesting.com. Now, so before we dive into today's topic, I invite you to go to passiveinvestingwithwhitney.com. There you can get priority access to our open deals at passiveinvesting.com, as well as you can schedule a one-on-one call with me so we can discuss your investing goals and how we can help you meet those. And then you get access to a slew of other educational materials, again, to help you build your skills and become what I call a formidable investor. Now, let's dive into today's conversation. Now, I don't foresee us talking about financial advice, legal advice, tax advice, okay? But if we do, make sure to consult your investing team before making any decision. What we are going to talk about today is how to take a strategic approach with using artificial intelligence. Now, I am seeing a lot of investors start to use artificial intelligence, whether it's ChatGPT, Gronk, all these other platforms, Claude, but they are doing it in a very unsafe manner. And I'll show you why it's unsafe. And hopefully you are not making this mistake yourself. But long story short, I really encourage you, if you have one takeaway here, do not allow that artificial intelligence platform to replace your CPA, your legal advisor, or your financial advisor, or heck, even set your investing goals for you. Okay, you have to stay in control of all that. All right, so let's talk about this. What is AI? Well, AI is short for artificial intelligence, okay? But what is its role? How has it been evolving in real estate? Now, a lot of people, a lot of operators out there are doing webinars on how they're using artificial intelligence to perform due diligence on an asset, okay? Now you're gonna see where artificial intelligence falls incredibly short. So if I'm working with an operator right now, okay, right now it is May 20th, 2025, and they tell me all of their underwriting is through their due diligence is AI based, to me, that's a red flag. And you'll see why, okay? Because there are some pitfalls here with using artificial intelligence only. Now, if artificial intelligence is helping augment their business, I'm a little bit more intrigued, okay? But let's talk about why that is. Artificial intelligence currently, as of May 2025, and I have to be very specific here because artificial intelligence is forever changing. Right now, it is really good at pattern recognition, parsing documentation that it's given, and doing some, market level analysis, okay? AI, like for a passive investor, would be great for you to summarize an offering memorandum, spotting red flags in an investment, maybe even doing some market analysis and market comparison, okay? But it should only be used as an assistant for underwriting, not to replace your underwriting methodology. So here's a quick little chart. Okay, and we're going to get into some prompts that I like using with artificial intelligence. Doesn't matter your platform, but this is what, as a limited partner, and you're thinking about utilizing artificial intelligence for your own personal underwriting of an investment. Where is it going to really help you? Where should you be extremely cautious, especially right now? Well, again, it's great at pattern recognition and summarizing data. So helping you summarize an offering memorandum, it's amazing for that. It can maybe even be great at like pulling rental comps in a particular area. Now, it's not so good at math. So if you have it look at debt risk within an investment, it may not be able to pull out all the different, math terms that go into figuring that out. Okay, it's not going to be able to vet an operator for you, right? Because it doesn't know your goals, your risks, your timeline, what keeps you up at night. All right, so only a human can help set those terms. As far as like flagging unusual patterns that it sees in, trailing 12s or pro formas, it can help flag that, but you still need the human involved in order to cross-check that data. Analyzing a T12 comprehensively right now, May 2025, it's not the best at that because there's a lot of math in here, and you're going to see why later on, why AI can be a little wonky around that. So really only a human can dig into the math of a particular deal. Legal review, okay. It's great for kind of sussing out red flags, but I would not use AI to replace your lawyer. Okay, AI simply, again, is pattern recognition, parsing data. It is not going to be able to go out and look at all the different Security and Exchange Commission, guidelines. It's not going to know all the cases. It's not going to be able to make recommendations legally. Same thing with taxes. Again, it's parsing data. It might seem like it's able to give you, language like a lawyer. I've seen people, try to use AI to replace their legal team. You still need a human involved for that. But this last piece is really the clear thing here, okay? AI cannot replace you looking at an investment and understanding if it aligns your goals. Okay, and only you as a human can determine what's in your head, what risks you're willing to take in an investment, understanding your goals that you need from your portfolio. Only you can do that. Now, can we give AI some information for it to help us with things? Absolutely. But this is a nice little chart to kind of help you understand where you still need to be heavily involved. All right. So if I went through that chart and AI really only can do two things really well on its own right now, why even use AI? Well, it's because it's able to look at data, parse down data, identify patterns. It really can save you hours of, heavy due diligence on a particular deal. There are some rewards here. It can, if you give it your goals, your risk, your timeline, okay, a heavily thought out investor thesis, it can look at a deal and recognize patterns and throw out some flags for you. So that's a huge reward. Um, it can also double check. Again, we're going to get into like how can we use AI more effectively in our underwriting as a limited partner. It can actually kind of double check some things and maybe throw out some ideas to keep you from making an emotional mistake. So there are rewards here, but the risks right now outweigh some of the rewards, okay? And so we have to understand how to account for these risks if we are going to leverage AI as a limited partner, okay? Number one, these are things that I've seen investors, either I've worked with personally, I've counseled personally on their investments, or I've seen in groups make investments and they go, oh, whoops, I made a mistake. Okay, so what are some risks here? Well, one, I think I've seen investors just put a lot of over trust and false confidence into AI. They'll post up, maybe like some math underwriting on a deal, and you're just like, wow, it calculated cash on cash completely wrong, or it calculated the internal rate of return wrong, and that investor is making a decision based on false data because the AI just isn't there yet on those math, computations. Also, AI can have hallucinations and misreadings. Okay, it's not fail-proof. Just like a human, we can misread things. Okay, we can like have false thoughts in our head. Right now, AI has that too. Okay, it even admits that it has it. So we need to be very careful of that. When we put data into artificial intelligence, doesn't matter what platform you're using, whatever data you put in, if you ask a bad question, you're going to get a bad answer out of it. AI is very confirming for whatever question it asks. It's almost like it's programmed to please in a way. Okay, so we have to be very careful with the prompts that we use. And then the biggest thing here is AI, again, can misread and miscalculate key numbers, which can be very dangerous, especially as a limited partner. If you, one, don't understand those numbers to begin with, right? And then you don't understand how they're calculated, and then you give it to AI and it spits data back at you, and you kind of take it, again, we're circling back to the overtrust and false confidence thing. So some key things that I've seen it miscalculate is simple cash on cash, okay? Internal rates of return, not able to look at a rent roll, complex rent roll, or a complex T12. It has a large, hard time dealing with that. And then just, there's issues with it catching like smaller anomalies that a very seasoned underwriter would catch. Now, here's the thing. I'm going to give you, again, you might be going, Whitney, wow, why on earth then would I use AI? Okay, I'm going to give you some prompts for it to help give you corrected information back, but you still have to know what you're looking at. Okay, again, AI is a great thought partner, but only you can verify the numbers and make that final judgment on them. So I've already kind of given you a couple of real world scenarios of what I've seen with investors, how they've misused it. But even in my own personal, under utilizing AI in the past 18 months, I've actually seen it flag, it was a missed opportunity. AI could have flagged a low reserve on a deal that I invested in years ago. And if I had been using AI and it was able to flag that there was low reserves, that probably I would have avoided a capital call. Okay, so that was a missed opportunity. I could have possibly leveraged AI for that. But conversely, I fed it a deal just a few weeks ago, and it told me, again, I fed it my whole investor thesis, all this data. It told me it was like the most rosiest deal for my portfolio. Here's the thing, I knew that it wasn't. I kind of gave it, I gave it a deal that I thought that it would I was testing it, and it told me it belonged in my portfolio when in reality, I already knew that it didn't. Okay. So if I had been actively involved in that deal, and I hadn't double checked those terms, those debt terms, I would have taken on a deal with a high refinance risk that did not belong in my portfolio. All right, so how do we use AI? Okay, I don't want you to think in terms of how do I solve and make AI work for me. I want you to think in terms right now in today's environment, what's the best way for me to leverage AI when I do perform due diligence? Okay. Knowing that with time, it is probably going to get better and better and better and better. Okay. It's just going to be able to amplify me, not replace me as the person underwriting the deal. So I came up with the AI assisted framework here. So 5 steps. We're going to go through each one individually, but just to kind of give you a recap, this framework, this AI assisted framework, first you got to start with your strategy. Then we got to put AI in the role of the thought partner, okay? Not the one that is making the decision for us. We stay in control of the decision. That how can it help us be a thought partner? We got to learn how to use smart prompts with AI, know what it's really good at, know what it's not so good at, and help it do its job at the things it's not good at better. Then we need to understand how to cross-check everything. All right, and then the last step, which is kind of wrapping everything in a beautiful package, how do we use AI to clarify things that are buried within offering memorandums, PPMs, all that sort of stuff, but not confirm for us? Okay, so how do we pull the data out faster? Okay, and so we, as a human, can make a better decision. All right, so number one, I'm going to pull up a book here. Have it at my ready. First step is make sure to start with your strategy. Okay, I always come back to strategy as the first step for any investor to take. It's something that I drive home in my book, Money for Tomorrow. But AI will work best, doesn't matter what platform you're using, when it knows what you want, okay? Which means you have to sit down and actually think about what do you want. So you have to sit there, understand what your investing goals truly are, what risk you're willing to take on in an investment, what is your investment timeline and time horizon, what are your cash flow needs, all of those things that go into putting together a solid investor strategy or investor thesis. Get that set first, and then you can feed it to AI as a documentation, put it in its memory, okay? That way, anytime you ask a question, you can direct it back to your thesis, okay? That is very important. If you're gonna leverage AI, you have to get that strategy, make sure it always stays current. It can be, for me, I like using ChatGPT, so I have a PDF of my investor strategy uploaded into ChatGPT. Anytime I ask it a question, I always point it back to my investor thesis. I don't go, hey, does this deal work for me? No. According to my investor thesis that's in a PDF in this particular file area, then I ask my question. I always point it back at the file that I want it looking at. Okay, here's the thing, AI cannot set your strategy. Okay, you have to get that done. Be very detailed with it. So that's step number one. Step number two, let's put AI in the position of being a thought partner, not a decision maker for us. And this is the number one. If the first thing there, not giving it your strategy and always pointing it back to your strategy is kind of the biggest mistake I see investors make. This is the second largest mistake that I see investors make. is they ask AI, does this deal work for me? All right, or some sort of question about this. But that's not what we want to do. Okay, remember, AI can hallucinate, it can misread data, it can calculate things incorrectly. We want it to be a thought partner to pull this information that's within us out. Okay, so again, first thing here, we want to make sure it has our thesis, and then we want it to help guide our thinking. Okay, so here's an example of a prompt that I love using. Help me to, maybe I've got an overarching question, a situation I have given AI, and I'll be like, help me determine if this deal fits into my portfolio based on my thesis. Here's my thesis. Ask me one question at a time for clarity and context. That is the most key statement here. Ask me one question at a time for clarity and context. So now what do you have? You've put AI in this, they now have some background on you. You've now put them in a role to interview you, and they're now interviewing you, pulling all this data out of you. And then they can help you pattern recognize if this deal actually fits your thesis. Okay, again, we want to put AI in that thought partner, put it in the position of what it does best, which is pattern recognition. Okay, so I learned that little trick from a book called The AI-Driven Leader, okay, by Jeff Woods. You guys might know Jeff Woods. He was one of the co-founders of the One Thing coaching group with Gary Keller and Gary Keller and Jay Papasan. But this is an amazing book, you know, for any of my business owners or high income professionals. That is something that you want to pick up, but this is gold if you're using AI. All right, now, since we've done those first two steps, we had set our strategy, we've put AI in the position as the interviewer or our thought partner, okay, what it does best, which is recognize patterns. Now, if we wanted to start pulling out data, okay, and manipulating the data, we have to use very smart prompts, okay? This is another critical step that I see investors do incorrectly, is they will upload the whole offering memorandum, all the PPM, the trailing 12, all the documentation up in one thread, and they go, analyze. Here's the thing, AI works best if you give it very specific questions and data in small bite-sized requests, okay? At some point in time, we're gonna get there where you can upload all this data and it doesn't hallucinate, doesn't like forget where files are, doesn't miscalculate, okay, mix things around. Right now, just give it small bite-sized requests, okay? So break down large tasks into these small requests. That's gonna help improve the accuracy and reduce misunderstandings, okay? It actually handles narrow structured tasks much better than broad, vague questions. Okay, so if part of this one is giving it small bite-sized data, and then also with our requests that we're giving it, give it a very specific request, not just something super vague. So instead of going, hey, does this T12 make sense? You go, list any unusual expense patterns in this T12. That's a very directed task you've given it to do when it looks at the T12. Okay. Another thing could be like, I've seen investors post their prompts, would you invest with this operator? No, what you wanted to do, you want to stay in control. Summarize the sponsor's track record. Okay. Now you can look at that data and you can make a decision. Now, here's a pro tip, and again, I'm going to give you some, directed prompts here in a second. As you are crafting your prompts to work with AI, okay, again, short directed prompts using small bite-sized pieces of data. For every part of your due diligence checklist, create a prompt, okay? That way you can use these prompts, maybe keep them on a Word document or a Google Doc so you can copy them when you're looking at deals. And those prompts will line up with your due diligence checklist, and now you've got a really seamless underwriting protocol. Okay, again, we're putting AI in the position to be our thought partner, pull out data, help us recognize the patterns. That way we can make more intelligent decisions. Okay, which leads us to step number 4, cross-check everything, okay? I see this so often with investors that are trying to leverage AI, be it in underwriting, active underwriting, passive underwriting, is they'll be like, hey, here's my interpretation, or excuse me, they'll be like, here's what AI said I should do. And then you look at it, you're like, wait a second, those numbers are off. Like, how did it calculate this? All right, so never trust AI as the final decision maker. We always want to verify any data that it puts out towards us, verify numbers, comparing outputs to the offering memorandum, T12 rent rolls, double check all assumptions. All right, so here's an example down here is that we can say, based on the T12 financials provided, remember we're given a small bite of data, calculate the trailing 12-month net operating income, right? So the operator has already calculated the net operating income for 12 months, but we give it the data, the 12, and we can double check, did AI spit out the same number as the operator calculated, okay? But we also want to go one step further. Please, show your math, show your steps, okay? That way we can recognize, how is it calculating? Did it do it correctly or did it do it wrong? All right. And the last piece here, make sure that you're, again, putting AI in the position to help you clarify information, not confirm information. Only you can make the final decision based on your personal investment strategy, risk tolerance, and goals. Now, as promised, I wanted to give you some prompts, okay? Now, these are not exhaustive, okay? You're gonna have to come up with some more prompts. All right, again, remember my book little reference here, AI-Driven Leader. This is not about investing. This is just a cool book to open your mind on all the different ways you can put AI in a thought partner role. But, if I were looking at a deal, and I wanted to understand, underwrite the sponsor a little bit, I can maybe ask it to summarize the track record and highlight any past full cycle deals of the sponsor. I can maybe have it summarize potential risk in the deal and follow up with that sponsor on with questions. If I were going to have it to pull market data, I might have it research the target market where the deal is, looking at telling it what I want it to pull out. Okay. Maybe I want to specifically look at population growth, job growth, and landlord tenant laws. Okay. Remember, I'm being very specific, giving it direct bite-sized data to work with. I'm not saying, hey, give me the whole stats on Charlotte, North Carolina. Okay. I might say research Charlotte, North Carolina. What is the population growth, job growth for the last 5 years? What is the current landlord tenant environment here in Charlotte, North Carolina? Okay, switching gears a little bit, we already touched on a few prompts to use for financial review. But another one you could ask, you could upload the trailing 12 data and say, highlight any unusual patterns or anomalies with this rent roll or T12. Again, putting it in its position, it recognizes patterns. That's what it does. It's a language learning model. Okay, based on this data, calculate the trailing 12 NOI. Okay, we're double checking, did the seller, give us the correct NOI? Okay, we can combo that with our other prompt with, what is the operator doing, going forward with that NOI? So we can confirm, okay, is the data we're looking at correct? Investment fit and stress testing. One of my favorite questions is, ask me one question at a time to help me do X. Okay. And very important, that statement, ask me one question at a time, because otherwise AI is going to throw out like 15 questions at you and 20 questions, and that can be overwhelming. One other area, risk analysis, highlight risk factors in this deal, highlight any unusual patterns. Based on the data that I gave you, calculate, summarize potential risk. Okay, these are all things that, again, we're putting AI in its role of what it does best. Now, guys, before we open up the floor for Ask Me Anything portion of our show, I just want to take a quick minute to recap what we covered here today about artificial intelligence, where it stands in May 2025, how you can use it to augment your underwriting of passive real estate deals, but using this framework of the AI-assisted framework where you're starting with your strategy, making AI the thought partner, using smart prompts, cross-checking everything, and most importantly, using AI to clarify, not confirm. All right, guys, before we start our Ask Me Anything session, this is your invitation. If you would like to have a one-on-one call with me to discuss your investing goals, you can join me at passiveinvestingwithwhitney.com. All right, I would love to open up the floor. Was this useful for you? What is one thing you're going to take away before you drop? What is one thing you're going to take away and start implementing in your due diligence process? Oh, somebody said the prompts are great. We'll definitely use them. Yeah, definitely. And you can come up with your own prompts, right? If you have your due diligence checklist, that is something that you could feed up to AI and ask it, help me create prompts. Cool. And you can, again, keep all those prompts in line with your checklist. This is how it can help you underwrite quicker and start pulling out that data, recognizing patterns and stuff like that. I need a checklist. Yes, we all need a checklist. Absolutely need my checklist. Somebody says, my takeaway, AI is my sounding board, but it makes mistakes. It does. I remember I had this realization about a year ago. I was so super frustrated, and I thought I gave AI a very simple thing to calculate interest on a HELOC, home equity line of credit. This is not related to passive real estate investing. And I literally got in a fight with AI. So a couple months later, I went to update the conversation, update the chat, thinking that maybe I can do it a little bit better now. I fed it into a new model, and we were still having issues with calculating home equity line of credit. And I'm going, wow, this is simple amortization. How are we getting here? So again, use it for what it does best, knowing, fingers crossed, that it's going to continue to improve. I hope to do another webinar 6 months from now, and I can say, yo, we have gotten to the point that AI, can now do the X, Y, and Z math. Okay, this is another way you can use it. Okay, but we're just not quite there yet. Let's see. Oh, a lot of great comments. Yeah, well, somebody said, I don't trust AI yet. It's only going to create more work for me. It depends. If you're super fast at reading profit and loss statements and memorandum, PPMs and operating memorandums, sure, it might make more work for you. Or if spreadsheets aren't your thing, you hate legal documents, okay, maybe it can actually help you pull out that data faster. My hope for you is that you now understand where its strengths and where its challenges are, and then you've got some tools that you're walking away with it to leverage its strengths while we wait for, the challenges to be sorted out. Is your data input for quantitative data in PDF or Excel format? I've used both. So if you can get it in Excel format, I think it's better. PDF, you can always have formatting issues, and sometimes that can throw off, the platform that you're using. Anytime you can get closer to the actual source data, I think I've seen investors that will have the Excel spreadsheet and just highlight the squares, the cells on the spreadsheet, and copy and paste. I think AI has a lot of trouble with large data sets that way. So if you can upload the data set That's even better. Oh, somebody said the prompt suggestions were very helpful. I'll use it to try to find inconsistencies. Yep. All right. Jumping back over to the chat. I'm new to investing, but this will be helpful in the future once I pay a short-term rental coach some money to school me on the process of real estate, investing, arbitraging, flipping, storage, and whatever the beginning RI real estate. Any advice on getting up to speed rapidly without huge cost for coaching? So somebody is wanting to understand real estate investing, arbitraging, flipping, storage, all of the different parts of real estate investing. I would go to biggerpockets.com if you're like, if you're just like, don't know where to start, go there, listen to their podcast, read the blog, start understanding what might interest you. Now, coaching, I mean, full disclaimer, I do personally coach as well. It can actually help you narrow down, collapse time, get you from point A to point B so much faster than you trying to figure it out yourself. But if you're just starting out and you like have zero clue, then start there. Start with some reading and some education. But as soon as you're like, oh, I kind of got the lay of the land, but I still don't know what I want to do, that's where it could make a great amount of sense to work with a coach, the right coach, in order to get you like into the game much faster in a more streamlined manner. So I think it's, if you have no idea what you're doing or where you want to go, get some clarity first, and then you can start narrowing down and understanding who you want to work with. How do you get your kids interested in investing or have patience to listen to the investing talks? Oh my gosh. I wish I had, I wish I had the golden nugget on this. So, okay, a couple different things. My daughter is a teenager as of this week. For the past 5 years, she's been, at home hearing me a lot talk about investing. So for her, she's just like, ugh, I can't, don't talk to me about investing or like buying stocks or, buying rentals or anything like that. She was like, I don't want to talk about it. But here's the thing. I know she hears me because she at Christmas got a windfall of cash from her grandparents and her uncle, and she was like, I don't need all this. I only want like $100 to go do what I want to do, buy what I want to buy. I want to invest the rest in stocks, and I want to make sure that I'm getting paid on a monthly basis. She wanted a dividend. So don't discount that the conversations you're putting in front of them aren't getting in there somehow. Then it's about, for me, being age appropriate. If your kids are younger, playing games are huge, maybe reading books about money, laying that groundwork. As they get older, you can start getting into more tactile, like, hey, let's take the money and let's go invest. Like my daughter a few years ago, she loves Squishmallows, the little pillow guys. I don't know if you've ever seen them. But then at one point in time, I was like, I'm not going to buy you any more Squishmallows. Like, we're spending a fortune on this. I'm like, why don't you invest in the company that makes Squishmallows and let's go invest there. You can earn a dividend and appreciation. And then when you want your next Squishmallow, maybe you can take a little bit of money out of that account because you've earned, and now you can go buy your next Squishmallow. So she started doing that. She researched the stock. It's Kelly Clark Toys, which is owned by Berkshire Hathaway. So she now has shares of Berkshire Hathaway. Now she's sitting on stock that she does not want to liquidate because she can see the power of investing, of being the owner rather than the consumer. But then you can continue to level up the games anytime you can put them in an experiential situation, kind of like AI, bite-sized nuggets, right? Don't try to do the whole dissertation on like, here's our financial system. Anytime there's a learning opportunity, just bite-sized nugget. We've talked a lot about inflation in the past couple of years, getting a dividend, getting a distribution. We've talked even most recently about tariffs. She has a cleanser that she loves using for her face that is from Korea. She buys it because it's a luxury item. Okay, she takes her income that she brings in, she buys that, but it went up by 25% because of tariffs. Now she does not want, we had to have the conversation of what tariffs actually are. And now she's like, oh, okay, I no longer want to spend my money here. So just think of bite-sized chunks whenever you can put it into relation of what's happening either to them or to the environment, and then eventually continue to stitch those all together. So that would be kind of my beginning framework. Books that I like, if they're super young, From Piggy Banks to Stocks is a great book. We've had Maya Corbrick on here. For older kids, and even young adults, old adults, it doesn't matter. My book, Money for Tomorrow, that can be a great starting point. Yeah, so back to the person that wanted to understand how to arbitrage Airbnb. Yeah, that's not what we cover here. So make sure you go to the right website. It is biggerpockets.com. Yeah, get dialed in there, get the lay of the land. When you start narrowing down your choices, I highly suggest getting a coach. When I first made the transition into hardcore real estate investing, and I mean, like, I realized I want to get to 50 units or above. I hired a coach. It cost me a bit of money. It was, I think I paid at the time like $5,000. I've made multiples on that coaching, multiples. I can't even tell you. I mean, I'm probably 1,000x at least on that coaching. It was the best investment I ever made in myself. So do not underestimate that. A lot of people think that not investing in yourself, you're saving money. You could be hurting yourself in the long run. Somebody said this could be a great session to talk about interactions with kids on money. Very well said. Oh yeah, we've done webinars with kids and money, and very lightly attended. But I love doing them, so we'll have to wiggle one in this summer. Yes, I do regularly do sessions on passing wealth on, or at least how to set up your portfolio in order to do that. But again, my primer, everything that I laid out. So I actually wrote the book Money for Tomorrow for my daughter. That's how it started off before Bigger Pockets got a hold of it and we turned it into like a whole formal book. It was the blueprint. Should something have happened to me, that was what the blueprint my daughter was going to inherit, to teach her how to build, scale, and steward the portfolio that my husband and I had scaled. Okay, end to end. So it was meant to be kind of a one-stop shop. And we didn't know, would something happen to us and she's super little, like 5, and like she needs to learn everything, or is she going to be like in her 40s and she's going to inherit our portfolio and need to learn how to steward it and move it forward for her, kids, if she chooses to have them. So that's the kind of a comprehensive blueprint that meets investors where they're at to move you forward. So definitely check it out. Let's see here. Oop, a couple different places coming in here. Do I coach on how to buy and operate multifamily? Not necessarily. For me, it's more about the overarching financial foundation. One sliver of it is based on what kind of real estate or investment portfolio you want to build. But if you, we kind of stay a mile wide and like 3 feet deep on the overarching financial picture. And then we can get dialed down into, what area of real estate you might want to go into. And depending on that, you might need subsequent, tools attached to that. But what I find, and this is a lot what I bring here to Passive Investing Made Simple, investors very much are about how do I get into the best deal? They do not think about how do I set up my financial situation that when I'm in any deal, my finances work. Okay. They don't think about how do I craft my portfolio so when the market goes up, down, and sideways, I win. Okay. That is what I help people do. Okay. Buying multifamily, tactic. Buying a car wash, tactic. Okay. We want to be focused. Even here, as a limited partner investor, we want to be focused on the strategy and the fundamentals that are going to make us a strong, formidable investor. So you guys can always, if you have more questions, you can reach out to me at passiveinvestingwithwhitney.com. Somebody said, have you ever had the situation where you think you had everything figured out in your portfolio, but it worked not as planned and you had to scramble to make changes in order to make ends meet? How did you come out of the situation? I'm actually doing a webinar here in a couple of weeks. I'll give you guys a slight preview. It's about kind of exactly that topic. And I touched on it a little bit when I talked about diversification a few weeks ago. I think, as an investor goes through a journey, you only know what's in the market cycle that you're currently looking at. There's a bias there. And until the market shifts, let's think back until 2019, 2020. At that point in time, I would talk to limited partner investors. They'd be like, what is one of the risks in this particular investment? I'm gonna go, well, one of the risks in investing in this multifamily deal is it does have, just full transparency, short term, adjustable rate interest rates. So if interest rates do go up, nobody knew they were going to go up as fast and as high as they did. But if rates do go up, we try to mitigate that with X, Y, and Z, but that is a risk. Okay. Until you're in the market where that happens, unless you're just super conservative, super contrarian, you probably didn't prepare for that. Okay. So, having ridden out two of these cycles now, for me, I gave you guys my tiered, layered portfolio here a couple weeks ago on how I think about making sure I have my reserves covered, my liquidity covered, my cash flow, what I need in cash flow covered by my investments before I start getting into equity investing. But here's the thing, that's boring. Most people get caught up in the excitement, the emotion of everything, what they see in the forums of what like the next hot deal is. This has been an amazing time for investors to, one, be patient, get liquid, get their cash flow tier built out because that's what the market is giving us. And just think about it. When the next recession comes, you are going to be in a much better position. What we are here to do is to help the next group of investors learn from our mistakes. They may or may not. Okay, cycles repeat itself. One of my favorite books is Same as Ever by Morgan Housel. He's the same author, The Psychology of Money. And he just goes through like 15 different, psychological mindsets that investors have in down markets or approaching down markets. And he was like, hey, don't beat yourself up. This is human condition. If you can learn from it, great. But if you didn't learn on the way up and you're learning now on the way down, make sure you get that plan in place because the cycle will happen again. Okay, same as ever. It will always happen. What's guaranteed is that human condition. So now I like this last question. How did you come out of the situation? For me is every time I have something happen to me, maybe it's a capital call, maybe I've had investments go into litigation, I've had investments completely collapse. I mean, when you're in over 70 investments, that's going to happen. Okay, it's not a matter of if, it's a matter of when. Okay, I always think, what do I need to learn from this situation? And I actually put that in place. Okay, so I allow myself to feel the emotion for like, 90 seconds, 2 minutes. Okay, that's a whole Tony Robbins, way of thinking. Okay, allow yourself to have the pity party because it sucks, but we don't want to be victimized. Okay, I'm sorry, we don't want to be the victim. We all will get victimized in some form or fashion. We just need to figure out how not to stay out of that victim mindset, which is asking the question, how is this working for me? Okay. The first time I lost capital in an investment, I went back through and I'm like, ooh, there were two key things about this operator that I entirely missed that should have kept me from doing this deal. That's now in my due diligence checklist. Okay. There's all these things that now, from deals that go, even deals that go well. Here's the thing. When deals go well and you're making money hand over fist, most people do not care to do the quote unquote postmortem and like add all the different things that they should have sussed out and put on their checklist. It's only when deals go sideways or south that they're now like, oh, what do I need to learn from it? Okay, so learn from it, put it on your due diligence checklist. Don't repeat the same mistake twice. So anyways, there's just so much to gain from there. We are so much more in control of our decisions than we give ourselves credit for. Whether it's, maybe you didn't have an investor thesis, entirely thought out, or maybe you deployed all of your capital in one part of the market cycle and weren't patient enough to deploy capital across all the different parts of the market cycle. Maybe you were just super unlucky and entered the wrong part of the market cycle. How many stock market investors that placed their life savings on April 2nd were crying the next day when the stock market started sliding? What was it, up to like 14%? Sometimes you just have really unlucky timing too, but do what you can. Make sure you incorporate all those lessons and learnings. That way you can carry them forward. That was a lot to share there, but hopefully you guys picked some sort of wisdom out of there. Ooh. Awesome. Well, if you guys have more questions, it's the time to drop them in the chat. Otherwise, we will see you. Yes, you're very welcome. Absolutely. Otherwise, we will see you next week, the Tuesday after Memorial Day holiday. We're going to talk about depreciation recapture. Keep in mind, guys, I am not an accountant, but we are going to talk at a very high level of what depreciation recapture is, how, in broad strokes, how it's calculated, and then, help you put together a checklist. Say like you have a deal potentially exiting this year, put together a checklist. That way you can take it to your CPA and they can help you do the math. Okay. Until then, guys, take care. And as always, thank you not only for being here and spending time with me, but taking time to invest in yourself.